Let's bring in Pete Bowden. He is Global Head of Energy and Power Investment Banking at Jefferies. In a rare TV interview, Pete, it's great to have you on during this Zero Week, although next year look forward to seeing everybody certainly in person. As I asked going into the break, how's the pipeline for deals, perhaps pipeline deals, which is or was your specialty?
Yeah, it's definitely getting better, Brian. Part of that is obvious. $60 oil is better for deal making than $40 oil. But part of it's more subtle in that we're seeing the emergence of a few new trends. First among those is the perception that COVID is abating, which should be a hugely positive catalyst on the demand side. The second is the impact of the Biden administration's initial changes in energy policy, particularly as relates to drilling on federal land, which could significantly curtail domestic production. And then third, we're seeing a very real secular trend towards ESG focused investing. If you take all of that together, it should mean that existing infrastructure and existing production is more valuable. You're going to have more demand, less supply, and a transition to alternative energy that in our view is going to be slower than most people think.
And has that been part of the thesis as to why some of these names have, now some of them have been heavily shorted, balance sheets are a disaster. That's a special situation. I get it, Pete. But it's not just the price of oil going up. It sounds like it's also scarcity of new supply. And when I say supply, I mean companies and stocks, because to your point, it's going to be a lot easier to buy something nowadays than to try to build something.
Correct. A massive amount of capital has been sucked out of this industry. And in that sense, oil and gas, Brian, tends to be, self-correcting. If you starve it, prices go higher. I think relative to the public energy companies, most of them, in our view, are trading below intrinsic value. I think there are a few reasons for that. First, whether we want to admit it or not, this industry has destroyed a lot of capital over the last price cycle. The second, is that frankly, with investors making so much money in other sectors like technology and healthcare, the buy side has lost interest in trying to figure out energy. And then I also think, with increasing concern over climate change, we've had the tobaccofication of oil and gas, with the obvious difference that nobody needs to smoke cigarettes, but everybody needs to heat their homes. Use household goods that have been created with the help of the petrochemical industry, and when COVID abates, to travel.
Shepard Smith here. Thanks for watching CNBC on YouTube.